Hey, good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Wednesday, June 3rd, and we got a couple economic news releases to go over today. We got starting off the private jobs sector, ADP employment for the month of May. This is important, but not as important on Friday's numbers that are going to be released by the Bureau of Labor Statistics. They don't always correlate the same way. So sometimes we'll see more jobs in the private sector, but the Bureau of Labor Statistics will show lower jobs or vice versa sometimes. So further ado, back in April we had 165,000 jobs, newly jobs created. In the month of May it increased to 201, so a decent number right there. We got the trade deficit, huge drop off there. This is obviously a good sign here. 50 deficit, which was huge back in March. It was a big increase at 50.6 billion. Forecast is supposed to pull it back to 43.5, and it pulled back to 40.9. A lot of this is kind of being attributed to the labor strife that we had back on the West Coast with the dock workers and the PMA as they're trying to work through negotiations. So a lot of it's being attributed to that with the shipments and the delays and everything else contributing. So we have a shorter trade deficit. ISM non-manufacturing, this is also known as the ISM services industry, or this is index gauging the service industry, and we could see a pullback in there. So anything above 50 is still expansion, but as you can see, we had a 57.8 back in April. Forecast is supposed to be in the same range of 57, and it dropped all the way down to 55.7. So pulled back. A little mixed bag of news so far today. Fed base book is supposed to come out here by 11 o'clock this morning, Pacific Standard Time. I don't foresee anything in there really changing, where the markets are at. Stock market is up. It's been kind of teetering a little bit here. This morning it was actually up as Dow was up as high as 50. As we're doing this, we're down to about 75, so it's pulled back quite a bit. Comments by Draghi. He's the European Central Bank's Fed chief over there, and basically what he had said that they are committed to their quantitative easing up until September of next year, 2016. So the markets really like that. The European markets are taking off as a result of his comments with his commitment. U.S. is kind of following suit. So if you followed any of the past recordings this week, we've really been taking more of our cues from Europe versus our own domestic policies or data that we've been seeing this week. A lot of it is, Monday was down because the concerns about Greece, and then all of a sudden they came back and said that the creditors had created a proposal, so that optimism rallied a little bit in the stock market. So a lot of this, we're taking our cues this week. It seems like it's more on European news versus our own domestic data that we're seeing over here. So this week we've been getting kind of a mixed bag of news in our own data here. As we saw, private jobs looking good, but our ISM services dropped quite a bit. ISM services dropped quite a bit. So different things like that boding well. There's a lot of concern here with the rate hike that possibly could be happening. They're pricing it into for September rate hike, but there are also some of those who don't think there will be a rate hike this year, maybe next year. They just don't think we're on strong enough footing that the Fed would go ahead and raise rates this year. Obviously, there's a lot of debate going on regards to that. Now, for the bond market, we're taking a huge beating here. There's not really any logical sense why the bond market is taking this big of a beating, especially with stock markets heating up as much as they are. And even the Fed has made comments in the last month, making comments how they thought the stock market is too high for to sustain its current levels. So as a result, it's pulling that from the bond market. Now, the bond market today, we dropped quite a bit, and we're basically at the same levels where we were about last November. So just about 6 to 8 months ago, those are the levels we're at now. We dropped that far. Now, we could potentially have a nice little rally once this gets cleared up and they get census come to fruition. But right now, the rates have been climbing up this week. All right. Sorry for the bad news. If you're in the stock market, obviously you're happy, but in the bond market, if you're looking for a refinance or purchasing, obviously you're not going to be too happy with rates going up. Have a good day, and thanks so much for watching. We'll see you guys tomorrow. Remember, we'll have the weekly jobless claims tomorrow, and then that'll be the prelude for the jobs numbers coming out on Friday. Take care.